All right, welcome back, everybody. Chart Addicts live streams. Quick reminder before we get started, FX Summit 2024 conference is coming up quick. I think we're about 111 days away. 110? 109 days away from the FX Summit conference. It's about 4 months. Make sure to grab your tickets. Use promo code Chart Addicts. Also, the last NASDAQ Masterclass is going to be August 26th. Make sure to secure your seat before it's gone. So, recession is officially here. We had a 4.3% unemployment rate print this morning. The data released way worse than expectations. So we talked about this a few days ago. The historical low for the unemployment rate is about 3.4%. That's low, low, low. That happened under Biden and Trump. Trump brought it down all the way from the COVID highs of 17% during COVID down to 3.6. And then Biden took it from 3.6 to 3.4. So we were doing pretty well. 4% is the average for a healthy economy, at least historically in the US. Anything above 4, we start to get into some dangerous territory. But Jerome Powell had already set the stage earlier this year, saying that we're going to experience weakness in the labor market. And then even yesterday said the same exact thing. He said we're going to be experiencing weakness, and that doesn't automatically mean that the Fed has to step in. All right. So the expectation was 4.1%, which was a little bit of a rise from, or just the exact same as the previous print, so no change, but it came out worse. So less people have jobs. Now, just like Jerome Powell said yesterday, I know it was a cop-out answer, but he said that you can't just look at the headline rate and kind of tell if the economy is doing good or not. You have to look at the holistic data. You have to look at the quits numbers. How many people are voluntarily leaving versus people being fired? Then you have to look at the number of open jobs in the economy versus the number of people who are employed. So we saw the JOLTS open jobs numbers at around 8 million. The difference between the people that have a job and the amount of open jobs, I call that slack. Like if you guys have ever, if anybody here has ever worked events and you've ever like had to set up wiring, when you put up extra, like there's a lot of loose wiring and you kind of wrap it all up, there's like slack in between it so it's not too tight. There's room in the middle for it to flex. There's room in the middle. So Jerome Powell kind of set the stage to where he said there's no reason for an emergency cut because of a hit, but I think 4.3%, especially this big of a jump compared to expectations, is not good. Now, what does that mean for markets? As a retail trader, most of you guys are thinking, okay, if the recession is here, if people are losing jobs, that means the economy's tanking, and so will stocks. Okay, members, I put this in the chats earlier. This is the difference between let's say like a smart investor, someone who sees opportunity, and someone who panics whenever the momentum is changing. All right. So let's look at this. If you're playing checkers or if you're playing Connect Four, you'll be like, oh, bad news mean market bad, right? If you're playing chess, maybe you'll be like, okay, that's negative for the Fed because now they have to put pressure on the Fed, but the Fed can't do whatever. And then 3D chess is what? What happens if we enter a recession? What does the Fed have to do, people? The Fed has to cut rates or print money, right? So what does that mean for stocks, especially tech stocks? Is that good or bad for tech stocks? That's good. When you drop interest rates and you print money, tech stocks go up because it's stimulative for the economy. People don't want to bet their money on long-term assets when the sentiment is shaky, when you don't know if the economy is in a recession or not. Now, markets are forward-looking. We talk about this all the time, 6-month forward-looking. So if they're expecting the Fed to do an emergency cut in August or to announce an emergency cut at the Jackson Hole Conference or to do that rate cut that there's a 90% probability for in September, the market is expecting a looser monetary policy environment. And if they're betting 6 months in advance, why wouldn't they buy it up now at discounted prices? And maybe not right now, right this second. So I told the members earlier, in the short term, we are going to see some bearish action because the immediate market reaction to news like this is always panic. Right? Unless we break above, I gotta hide this. Unless we break back above 18.5 and close, then I'm just gonna be buying this up now. So we could have some short-term bearish action, head a little bit lower. And by a little bit lower, I mean then back to these April lows. So Members, you already know what I would do, right? Actually, that got retested, that got retested, this hasn't got retested. All right, so I would put 17,770 here. That would be a downside target, and then we would start the recovery. So whether it's short, whether it's today or whether it's in a week and a half or 2 weeks, the market will recover because markets are the institutional players who hold the most money are going to be pension funds, banks, and let's just say any asset management funds. You have the JP Morgans, you have all the pension funds, you have BlackRock. And so they're buying on large scales for anyone with a 401k or a pension. So they're looking at these discounted prices saying this is the best time to buy assets for my clients because it's all this is a 4 or 5% discount just on the index alone. And then on individual stocks, you probably have a 10, maybe 12, 15% discount. So institutions don't panic, especially not at a 3% drop on NASDAQ, which is in the big picture kind of inconsequential. And so, yeah, at some point they're going to step in and we're going to be right back to the bullish momentum because this is just about as good as it can get. All right, let's talk about price action here real quick before we kind of go into more economic data. So 1 hour, we're looking at clear break below our support. So obviously sellers are in control. And then we have this big wick rejection. So buyers tried to push back inside the range. Sellers had all the control and then bearish engulfing under the zone. So as of right now, buying not high probability at all. So what would we look for? We talked about this a few days ago. I think a few of you guys paid attention. How would I signal that this thing is recovering? What would I have to see here? Let's wait for these answers up in the chat. All right. A break above, yes, but specifically if we're talking about candles engulfing above these. So whenever you want to see a shift in momentum, and we're going to talk about this a lot more in the NAS 2.0 class. And I mean, this is really 1.0 stuff. And honestly, something that we're implementing just for you guys, just like as a housekeeping thing. We have an intro to trading course, and then we have like a trading mastery course. And we're going to be including those in the NASDAQ masterclass so that before you even take the class, you have to have a foundation in trading. So understanding a shift in momentum. Whenever you want to see that buyers are taken back over after this much selling pressure, what you have to see is an engulfing candle in some wick fills. So ideally, the engulfing of one candle is enough. And so, Mike, you were close, but it would be a break above the 886, but also the engulfing above that previous candle. And then ideally, you'd want to fill 2 candles or 3 candles previous. That will show a clear shift in momentum. Once you have the shift in momentum, then you can look for a higher low entry. So one of these wick kind of rejections so that you can get solid entry price. All right. So, I mean, right now we're retesting and we could go all the way up and then just wick back down. So we have to wait for this closure, which is in about 20 minutes. So we got some time here. Typically on Fridays, if you're going to see a shift in market structure, it's going to happen in the second half of New York. Not in the first. TGIF. Yep. Closed above the range and a higher low being created. C4. But tears to my eyes. All right. I had to move my phone real quick. I was worried that the tier would drop and just accidentally hit the buy button right now as NASDAQ was closing above the zone. I had to move it out of the way. I love it. Now, if you guys remember, 18,500 is that secondary zone that we were looking at from the Sunday market outlook. So if we go back to those recordings, I said that there was 2 levels that we were watching. First level got broken straight through, and so there was a closure under, no trade here. We took the shorts. Well, I didn't take the shorts. Somebody hopefully took the shorts. And then I was looking for the longs, did not hit my buy entry, shot up to the take profit zone. Woke up in the morning looking for 886, didn't happen. Tried to take 886 yesterday, didn't happen. and then did his fat recovery, which, wait, sorry, this was Wednesday, I think. No, this was Tuesday. And then Wednesday, we had that massive bullish push, which happened over London session. Waited for the retest, was in profits on that retest that we took for the buys. And then the market ended up filling the entry yesterday, hitting stop loss twice, lost 2 trades in a row. I did take a third entry, but I closed it in break even. So honestly, yesterday, not the best day. This week, honestly, not great. Missed 3 trades and lost 3 trades. So it only takes one for me to make it back with a 1.5 or a 2-to-1 R. I'm positive I can make it back if I use a full position size. So I ain't tripping. But yeah, it's a trash ass week. Not happy, but got to stay focused. So that was the first zone. The second zone was 18,500, and we had this massive liquidity grab through the zone, and then buyers have seemed to step in here. Now, this is, as of now, an indecision candle. Unless we have a bullish closure, like a serious bullish closure back inside, this is neither bearish nor bullish. It's an indecision candle because the body is holding that support, meaning that buyers had an interest in holding that support in that 4-hour range. And then this 4-hour time range right here, we're holding support again. All right, sellers tried to push down, couldn't. Buyers tried to push up, couldn't. If we close just like this, it's anybody's game. If we close more bullish than this, then we can look for a retracement and an entry. All right. Don't get too excited. The market could still wick. So there's smaller time frame stuff. You go here to here. Here's your sell entry. So if there's a sell entry, it'll be from right here. Okay, so I'm going to wait till it gets to the zone. If it does the sell entry and then gets stuck at this little inverse head and shoulders, ooh, if it gets stuck, so it's going to be like a 3-step thing. Close up here, do the retracement, hit the higher low, and then I'll still need to see it close back above, and I'll enter right here, stops below this low. Or maybe entry 1, entry 2, just so I get a better risk and reward entering right here. Too much sauce, too much sauce. I got carried away. Blame the bang energy. All right. Make sure you guys drop a like on the stream. Why? Because it takes 2 seconds. It's a click of a button. I'm out here streamlining this stream of conscious thought while analyzing global events, going through macroeconomic data, sifting through geopolitical turmoil, and synthesizing it all down for your benefit. And all you got to do is click a button that says like with a thumbs up. Makes everybody feel good. I don't know. Seems like a fair trade-off to me. Can they be inducing retail buyers, or could it be institutions buying it back? Right now, we don't know. Until the candles close, Mike, it's literally anybody's game. That 4-hour candle is looking good. But I'm gonna need more than one indecision candle at that support after all this selling pressure, bro. I've been buying way too much, and it's been breaking through every level. And I've learned something very important is that you have to be so mindful about the amount of money you made in the bull market. Okay, because once the market starts retracing, you got to like, so for me, what I do is, let's say I made $24,000 in the bull market over the last 3 months. And then the market starts retracing, I'm losing money. I got to take a percentage of that 24,000, and that's all I can risk on the, buying these dips. Because if I keep trying to buy the dip, there's a chance I'm going to burn all the money back and more, which historically is what I did in 2017, 18, 19, before I really got a hang of things. Right. And then even still, like a few years ago, I still got stuck in break even by giving back a lot of the money because I just kept trying to force trying to guess the low. So now I'm still going to take every trade that we're taking on the live streams, but I'm doing it in such a smart way that I know exactly how much I can afford to lose. And that's my, it's like going to the casino and you win big, like $5,000 or something. And you're like, all right, from now on, every time I go to the casino, this is the pile of money I can use. Never going to dip in more. And so now I'm just throwing 50 a day, at it from that amount until the market reverses back up. And then we just start to go back and make money on the buy side. And every bull market, I get smarter. We all do. We get more experienced. And so you can milk that bull market more and more because now I know how to copy trade all these accounts. And the maximum accounts I can get 300K, I can get 20 of them on Apex. That's 6Ms. So before I'm like, okay, yeah, I milked 300K accounts on FTMO and TFT. Okay, cool. But 20 accounts at 300K, like same shit I did before, wake up and buy with a better entry and better risk model, risking way less of a percentage of my account. But 1% of 6Ms is 60 bands. All right. So if I'm doing 0.1% risk, that's $6,000 total risk. If I do a 1-to-1, that's 6 grand that day. If I do a 2-to-1, that's 12 grand. All right. Shout out to Jensen. That's the game. So yeah, if you guys are wondering, okay, once the bull market starts, do we have to milk it all with a wick entry at the bottom? Is that how we get rich? No. You got to identify the low. So once you identify the shift in momentum and you know that buyers now have control, you just start looking for buy models every day. Right? At the very, very bottom of the trend, it's model 3. In the beginning of the trend, in the first 2 retests, it's model 2. And as you get later in the trend, it's model 1s and people. Big money season loading. Mike, I didn't even answer your question, but I answered 5 others, right? And it was valuable. I'm gonna watch this back later and be like, I said all that? Was that me? I didn't even come up with this stuff. Jensen says, yes, sir. Jensen, you already know. Mike, I've been seeing you taking notes on the streams, bro. I want a copy of that book, brother. Because I don't even know what I'm saying half the time. So I need a copy, bro. I'm always about to run away with the sauce. That's the real heat. That's the black pages right there. Previous years, I got burned too many times trying to catch the knife. And that's the thing, bro, is sometimes you're like, okay, now I'm in drawdown, and so I'm gonna over leverage a little bit at this high probability entry because it's a higher time frame zone. It's a perfect fib level retracement. You're like, let me just catch the wick, over leverage a little bit, make my money back, and then that goes down too, and now you're even deeper in the hole. So many mistakes get made. So now a lot of the rules I've set up for myself, it's all about protecting the capital first. So when I say cut your risk in half after the losses, or cut your risk in whatever percentage, that is to protect the losses, not to play safe. There's no safe in trading. You're putting money on the line. The only safe thing is to not be trading, right? To have the money sitting there. But even still, your broker might go under. So there's no safe. You're taking risk. Okay. So when I say it's like it's more methodical and strategic about how you deploy risk and how you deploy capital. It's not about playing it safe. It's about being intelligent about risk management and capital management. Why did I draw wick to wick? Sam, I went 5-minute body. You already know wick to wick versus body to wick. So, you can do the rest with that. This is a higher time frame zone. This is kind of my last line of defense here. Okay, because below this, we're gonna have to do continuation model from this range here. This little dip, continuation model here. Yo, 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 yo. We did do continuation model here. I just went, whoop. We already had that first test off that Model 1 continuation, but now we have the second test of the Model 1 continuation. And maybe we get a Model 2 continuation to 17.9 and lift off. And worst case scenario, if this is that range, before we had the dip, then we could go as low as the bottom of that range. That's Model 3. But that's NASDAQ 2.0 stuff. Not going to go too deep into this today. All right, I got to mark off some of these zones. These are heat right here. See, like we closed above the zone, but that's a weak closure. But if we hold this high or low, get a little invert head and shoulders action, money. Let's take a tour around the other asset classes just to see what we have. Oh my. Do I have to say it? Put a 1 in the chat if I should even do it. Should I even do it today? It's a Friday. Should I do it? You don't even have a choice. Too quick for you. Super secret magnet indicator. Can't beat it. Can't fight it. Can't touch it. Pound for pound, number one, undisputed heavyweight. Not that interim bullshit. One, bro, smash through the zone and reject. Respecting it like you just met your girlfriend's dad for the first time. Bro, I'm telling you, respecting it like you just walked in for your first job interview. Hair slicked back, shirt tucked in, respecting the zone, right? Respecting the zone like you're not trying to get canceled on social media. You understand? Took my first sell this morning up 2%, not trading the last 4 days. Once we start buying, it's game over. Bobby, good for you for being flexible and taking the other side and being able to kind of, see that shift in that momentum. But man, oh man, it doesn't get better than this. Phase one. All right. Not gonna do it to him. All right, so you have this little channel at the top of the range. That's where things start to slow down. And then, the fake out. This is the baby pips buy retest right here off the break of the channel. This is the baby pips buy entry. And then, big smash. Where'd all my money go? Have you ever seen that meme from South Park? And it's gone, right? That's the and it's gone candle. And then you got a perfect retest for Model 2 right below the range. Home sweet home. Okay, so if you guys don't know what I just said, click the link in the description. Take the NASDAQ master class. Clearly, it works on every instrument. Super secret magnet indicator not available to the public. Stop asking, stop begging. You guys been asking your friends in the DMs, on the emails. When can I get the magnet indicator? Never. NASDAQ 1.0 students, if you guys took the initiative and invested in yourself and you guys took that 1.0 class, guess who's going to have first access for free to the NASDAQ? Can't even say that. The super secret magnet indicator when it comes out. And will it be integrated on TradingView? Working on that part. But will we be able to use it on every other platform? Yes. Okay, so shout out to everybody who took the NAS 1.0 class. This is our thank you and our congratulations to you for investing in yourself. And it's gonna get that much better to where this is gonna find the trades for you. Entry, take profit, exit, all the rest. All right. So 4.3% GDP print, not good. The Fed could start printing money. Makes sense why the dollar is dumping. Kind of seems like our data is accelerating a lot worse or a lot faster in a negative direction than all the other countries. So, Bank of Canada and the ECB have already started the rate cutting cycle, obviously, because their economies are in the dirt. You don't start cutting rates in an inflation crisis unless your economy is so down bad that you need to stimulate the economy and stimulate activity by lowering interest rates. When we lower interest rates, like I'm not buying houses right now, I'm not buying real estate properties, I'm not investing in real estate, I haven't got a car, right? Because the interest rates are astronomical. And most spending in America and retail consumption is done through credit. So as soon as they drop interest rates, maybe I go start buying houses. Maybe I go get a new car. Maybe I go start buying appliances for my house and put those on the credit card. So that is what is so stimulative about lowering interest rates. So clearly we saw Bank of Canada and the ECB do it, but America seems to be in a situation where our economic data is accelerating faster than the other folks. From 4.0 unemployment just a few months ago, then we had 4.1, which was an acceleration in the wrong direction, and then now 4.3 in the span of a month. That's not good. All right, so could it be a seasonality effect? I'm going to look through the data later, just so I don't bore you guys, but I'll look through the data later and see if there's seasonality to it, to see if there's anything in the quits, jolts, or open jobs data reports that could signal that this is either good or bad. But something tells me this has something to do with the 15 million people that found their way into the country. Because of the total non-institutional civilian workforce that's able and willing to work in America is about 260 million people. Now, if 15 million, which I have a suspicion that it might be higher, entered, that is a growth of about 7% of the total civilian workforce population, assuming that there's no elderly or folks, coming through whatever. A lot of jobs gotta have been taken just off of that. But since folks are undocumented, the only documentation that we have is for people who can no longer find a job, and that shows up in the unemployment data. Could that have an effect? It might not be a popular opinion, but I don't give a fuck because it's true, right? If you just follow the money and follow the data, clearly when you add 7.5% in 1 year to the civilian non-institutional workforce population, you're gonna get folks that are in the country that can't find jobs, and that will show up in the, in the data reports. That does not include the non-documented labor force. All right. Any questions? I don't know how we got on here with the DXY. DXY probably looking to continue to the downside. Super secret magnet indicator doesn't predict time. It just does price. All right. So we're going to hit this third one now? No, obviously not. Could we retrace all the way back down to the 101.4? Probably. But because we are in an interest rate cutting cycle, the longer that the Fed holds off on cutting, the more favorable that the dollar becomes compared to everywhere else. I think this sell-off is in anticipation of the rate cut that's coming. Okay, so let me just play this currency game with you guys to kind of break this down. If you print a lot of something, the value of it goes down. When something is scarce or it's expensive to borrow or it's hard to get, the value goes up. So because the economy is kind of entering this recession, we have a 4.3% unemployment rate. That means that in the next 2-3 months, we're going to get rate cuts from the Fed, which is going to make money a lot easier to get, specifically US dollars. And so whenever you have more supply of dollars, then you have lower price. Okay, so the sell-off is because of the anticipation of a rate cut, but a currency is all relative. The DXY is not just the dollar, it's the dollar index. So it's the dollar versus a basket of a lot of other global currencies based on the weighting of their kind of like just the volume of the currency movement, how dominant they are. So if the rest of the world is in a cutting cycle and America holds off at least through until the September meeting, the dollar will fly because everything else will be crashing. It's all relative. The Canadian dollar is going to keep crashing. The euro is going to keep crashing. The only thing that's going to outperform the dollar is going to be the yen. Because right now the yen is doing the exact opposite. Right when the Fed is about to start lowering interest rates, which is historic, Japan is just raised interest rates by 15 basis points, which is insane. Or 25 basis points, excuse me. They went from 0 interest rates to 25 basis points. That little move from the yen is probably the most historic thing that we've seen in currencies since the Fed started raising interest rates in 2022. So this is a very big deal. That's why you're seeing GJ and UJ fall off the face of the earth. All right. So dollar go up soon. Short term, dollar go down. Super secret magnet indicator, bro. Come on, bro. How is this even possible? Also, members, I'm going to show you guys this one real quick, but I'm going to have to hop off this specific Bitcoin chart. So pay attention to this just for a quick second. Okay, massive drop off. This was the initial sell-off that we saw. Had to push all the way back up first to 78, then to super secret zone, super secret level that I have to mark off here, super secret, undefeated, undisputed level right here. Perfect Rick rejection right here. And then now straight past TP1 and on the way to TP2. Okay, so this is the members version, and then this was my Pipstradamus version, where I predicted this. We predicted this. All right, we predicted the exact price at the Bitcoin halving, which was 60,800. We predicted the kind of recovery after the halving, the dip down. Everyone's like, oh, it didn't hit the zone. I even started to think it didn't hit my zone. And then I was like, wait, Roy, you're goated, bro. If the market doesn't do it, it's the market's wrong, not you. You just got to give it time, right? Because I'm nice like that. All right, so here's my prediction: is that this was like an early kind of like little blimp, little appetizer. I still think we have one more downward trend before the year is done, and we better hope so. People, we want to buy altcoins at the dirt. There's a difference between buying an altcoin at 0.003 and buying an altcoin at 0.008. Okay, here's the difference. When this thing goes to 3 cents, All right, 0.0003. My bad. I'm thinking about a specific coin here. I'll tell the members after this. If it goes to 3 cents, that's 100x return. So if you put in $1,000, now you have 100K sitting in that Coinbase account. Okay, that's a bag, right? That's a bag. This is my playbook. Like next year, 2020, 2025. Oh, where did Roy go? We don't see Roy anymore, right? Let me just go ahead and pay attention to this example right here. And now you'll know, did Roy buy a house in the side of a mountain in Peru with high-speed Starlink internet? Where the fuck where did he go? Right? It's from this. Now, if you do 0.008 and it goes to 0.003, fuck, why do I do this to myself? Bro, I can't do math like this. This is too many. Why not pick an easier number? Let's do 0.006. Okay, now that's 50x. I'll still take the 50 grand, but I will definitely take the 100 grand instead. You understand me? And so if you're going to wait until Bitcoin starts to pop off and you see the initial rally, what was at 0.03 or even 0.02? But 0.01? 0.01 means that's a 300x return, right? So this was my life in 2017 and 2020. So if you're going to wait and you're not going to catch the bottom and you're just going to keep, not having your eye, not using your technical prowess that you've learned and curated from trading and implementing that in investing to try to find higher time frame entry zones, then you're going to be missing out on big gains. You guys understand me? You're never going to get rich off of Bitcoin. Because right now, Bitcoin's price is at 60K. Let's say it comes down to 40K. 40K up to 100 is almost is 2.5x almost. Oh no, it's exactly 2.5x. So you put $1,000 in, you're gonna get 2.5 grand back. Dude, I could sell lemonade on the street today and probably make more. You understand me? Fuck Bitcoin. Right? Now, the whole goal is to own as much Bitcoin as humanly possible. Like that is everybody's goal. And because we have a small audience, I can say this. If there was an audience of 1 million people, selfishly, I would not be saying this because there's only 21 million Bitcoins out there, people. There are more millionaires in America than there are Bitcoin. So every millionaire in America wanted to buy a Bitcoin, they could not. You understand me? So the whole goal, get rich off altcoins, and then obviously convert that over. Not financial advice. Please do your own research and consult a licensed financial professional. And you can figure out who's a licensed financial professional by going to FINRA broker check, and you can just look up folks. So you would definitely look up individuals who are licensed to give financial advice. You don't want to be taking advice from me, right? I'm nobody, right? This is not financial advice. Please consult a licensed financial professional. All right. And definitely don't look up anybody else in the Forex space and then do SEC or broker next to it because you'll get different search results than what just came up there. All right. Boom. You guys like that little slight dig in between the education? Little slight one. Lemonade on the street? Yeah, bro. You think I'm doing a 2.5x? Bro, I'll go to what is it called? Robinhood and like buy AT&T shares or something if I want 2.5x. Yep. All right, if you guys are on YouTube, make sure to check out that link that just got put up to sign up for the last NASDAQ masterclass to learn how we trade, learn how to see markets, learn how to analyze, and then have an entry model strategy that is undeniably consistent. Whoa, whoa. Uh-oh. They're definitely trapping buyers here. I want to buy this so badly. Yo, I want to buy this thing up, man. Look at this rejection. Sheesh. It's not convincing enough. It's not convincing enough. Where's that 5-minute high? Okay, we're gonna go. I'm getting surgical here. Don't ask questions. I'm not gonna be able to talk about this unless you guys take the NASDAQ masterclass. I'm on the 1 second chart. It's like, no. I was gonna be on the 15-second chart. Well, that's gonna get too messy. I can't have this many zones up. Okay, we're good. Uh, it could happen, people. It could happen. So here's what I'm gonna do. I'm gonna wait for a break above and engulfing above this candle here, and then I'm just gonna catch the wick retest of our buy zone of that 18,500. Easy. Says I got a 1000x coin. All right, don't if you promote it in the chat, that's strike one, two, three, and four. All right, I'm never seeing your face again. Be banished. Okay. We're doing good, people. It's a Friday. Doesn't look like there's any trades. Welcome to the recession. What does that mean for us as traders? Nothing. It means there's more volatility in the markets. And guess what? All of you guys that thought, oh, I'm going to fire my boss and give myself a raise, right? All the IML folks, all you former guys, right? All that bullshit. And guess what? We're all slaves. You're a slave. That's what you are as a trader. You're a slave. Roy, how am I a slave? You're a slave to volatility. Markets don't move. You don't eat, bitch, right? So we got to accept our place, but it also comes with a sense of humility that is required to be a good trader. Because if you feel like you're the shit and oh, I'm a walking ATM, the fuck you're not. Wait till your broker goes out of business. ATM, right? User error. That's what the ATM is going to read. You understand me? Right? So right now, um, my number one priority, just let me just break this down one last thing. Last priority for me is as a trader, don't burn your money looking or catching the falling knife. If you're making money on the sell side, don't over leverage and force into the trend because now you're caking up and you're doing whatever because the second it reverses, it'll eat it all back. If you have a smart strategy, you're going to be able to capitalize on this cycle. If you don't have a smart strategy, uh, it'll look like the last 2, 3 years of your trading. You heard me. Okay. And so if you're like, oh, I'm just going to keep playing it by ear, that's been working for me for 2 years. Hasn't. Newsflash, right? Right? Fucking snooze on the alarm, wake up. All right, you guys like that one? See, everybody says you're gonna stop cursing on the streams, and then I curse on the streams, and I can see the retention chart right in front of me, and it's absolutely through the roof. I can see the engagement chart. It just broke through the fucking, it just broke the meter. And now, oh, Rui, you gotta stop cursing. Well, stop cursing. The stream is whack, right? I don't even want to stream no more. People logging off and whatnot. Oh, Roy's giving out good information. Fuck him, right? Because that's what people on YouTube want. Man, y'all got me conflicted. All right. I'm joking. All jokes, obviously. Maybe. We are slaves to volatility, though. That's the truth. So with that being said, make sure you don't burn your eggs or whatever the fuck the saying is. Don't spend all your money or burn all your money trying to catch the falling knife or over leveraging into momentum. Save ammo on the sidelines for the recovery so you can milk the shit out of the bullish trend. Risk management is your best friend. And if you guys still haven't found success in trading, please sign up for the NASDAQ Masterclass. I've never had to beg somebody to do something good for their life, right? You do that for your friends. I don't even like my friends, right? But I'm still recommending this to you guys because it will get you on track. And now there's still time after you take a class or whatever it is that you have to develop yourself. And so the sooner that you get started, the better. Sit there, oh, I'll just get started 6 months from now. Bitch, you could have spoke Mandarin by now if you started 2 years ago, but you didn't. You had your hand on your dick playing 2K, right? You could have been playing the cello, right? You could have been multilingual, but no. So 6 months from now, you're either going to have your shit together in trading, racking up these withdrawals, or you're going to have, right? You're just going to be in the same spot, kicking rocks. You're going to be sitting there twiddling your thumbs and kicking rocks in the same place, standing outside a street corner, just begging for change. US 30 is setting up an opportunity. Whoa, whoa, whoa. What do you know about opportunity, C4? Yeah, brother, the opportunity is, oh, whoa, never mind. Hold on. Uh-oh. for everyone that was shitting on the NASDAQ trade yesterday because it was like a smaller zone and it was in the middle of this whole thing and it was the low of the break and I was trying to catch an 88.6. Yeah, that's why. Because that on US 30, that shit worked. And yesterday when we tried to do it on NAS, it said, "Oh, Roy's trading today live with his account in front of humans." Yeah, fuck him, right? Because that's what happened. So yeah, you guys know super secret extension level, NASDAQ 2.0 stuff. That's there. So I'm gonna go ahead and mark that off. And then I'm gonna go low to high. Wait, this got corrected. This has not been corrected. Give me some. Uh-oh. 1 hour body. Where's the body? Body is right here. Oh my. Let's go 4 hour body. 4 hour body and that extension, same exact price? Huh. Weird. He said, knock, knock. Who's there? Roy with the NASDAQ 100 master class. Kevin Gonzalez, you got jokes? Bro, you think you got jokes? Bro, 30% of traders failed their challenge in the first day. This is prop firm data from the back end. 99% of traders who have bought a challenge in the past year have failed a challenge. 99. You think it's a joke? Let me give you another statistic. 30% off the NASDAQ Masterclass if you use promo code ChartAddicts30. Now, how was that, Kevin? Yeah. Yeah, that's called greatness right there. And those are real statistics, by the way. He said, "Nah, I'm just funny looking over here." All right. Well, good thing you don't have an Avi, brother, because this would have been a bad day for everybody. It's all jokes. Kevin, I appreciate the laughs. The comments are geeking me, bro. We got Ray, Viva Mexico. Y'all gotta get your shit together. You know what I'm saying? Right? Get it together, brother. You know what I'm saying? I went to Tulum not too long ago. You know what I'm saying? Prices going up. Y'all got inflation too. I need you to talk to your people. You understand? I need you to bring the prices back down. All right. And I need them to stop scamming me with that exchange rate when I'm in the local shops. Oh, it's 25 to 1 today. Bitch, I'm a Forex trader. I know the exchange rate. This is cap. I work in construction, and for the last 2 months, I've been building walls on trader floors. Top one hedge fund manager company, Citadel, in the center of London. Every day, I try to see what they're doing. Well, you better stop there, wave catcher, before you get me indicted. But if there's anybody that'll get your ass for speaking up, they might be on that list, man. So I appreciate you, and go ahead and hit me on that Roy Jr. at Proton Mail. All right, let's go ahead and talk. Okay, okay, okay. That was jokes for the YouTube people. Biden's the best president. Vote Kamala Harris. Eat the Beyond Meat. All right, eat the bugs. It's setting up. It's setting up, but the closure. Here's the thing about trading, guys. If you don't take the trade now, you're gonna have to basically accept whatever price the market's gonna give you after the rejection. But if you take an entry prematurely before the closure of the candle, there's a risk that the market just continues to bleed because there hasn't been a confirmation. So you're either going to risk that high probability for risk and reward, or you're going to risk and reward for the high probability confirmation. It's your choice, right? For me, the reason I enter off these zones without a clear confirmation is because I want R and R, because I've been taking some losses sometimes, and I need the winners to make up for the losses, you know? Okay. Yeah, no more jokes, no more jokes, no more jokes. Did I say something about gold? I said a handful about gold, but I didn't said super secret. I didn't said undisputed, undefeated. Take your booster shots, Mike, 100% right. Love them all. Take every one. Not medical advice at all. All right. Yeah, US 30 really is setting up for an opportunity. If it holds above this 39,540 level, we can have a clear continuation up to 39,750, back up to 40,100. Pretty clear cut. Okay, NASDAQ closing back below the support, but I'm waiting. So here's what I'm going to do. I'm going to set up an alert right above that zone in case we break back above. and I'm going to set an alert below this wick. That way, if the market fills and is continuing to the downside, I know that it's gone. Okay. Wait, do I have too many alerts? Where's my third one? Oh, okay. So that way I don't have to watch the charts. I can get on with my day, and I make sure that I know if the market recovers, maybe a bit higher here. The market recovers and fills this previous candle here. So here's the whole thing is like we're coming down for a rejection, potential inverse head and shoulders here for the move up. If we close below, no buys. If we wick it, then as soon as it breaks back above that support, I want to be in. If it goes under, then the market's gone. I'm not on the short side, especially not this low into the trend. And so I'm just let it go. Cool. All right, everybody, drop a like on the stream before you hop off if you enjoyed this. We stream every day live. We're doing an education session for members tomorrow. It's going to be members only, I believe, around noon, but we'll verify with you guys. Use promo code ChartAddicts if you guys want to grab your seats to the master class, and use promo code ChartAddicts to get your tickets to the FX Summit 2024 conference. People, we got all the largest exchanges for Forex and crypto coming. We have some of the biggest prop firm traders in the world, the number one largest prop firm traders, basically the whole top 5 list coming to speak. We have the top 5 prop firms coming to speak, partnering up with Top Step, Apex, and the rest. This is going to be an absolutely epic meeting, and it's going to put the Forex space on the map. So if you guys are trading futures or Forex, this is our chance to break out and to really do something to set up an industry where the standards are higher, where we're connecting with these large brands and these large institutions to sort of make everything for us better. Because if all the prop firms and brokers start connecting with the Binances and the Oandas and everybody else, maybe things get cheaper for us because now they have better technology providers, more reliable partners. This is going to be a chance for us to take this to the next level, and we need your help to make it happen. Let's go make this historic. Let's make this 5,000 people or more, and let's go do something to really put the kind of retail traders on the map. Right? They got to stop messing with us. And the only way to do that is to show them how many people we can bring to Dubai. See you guys there. Grab your tickets. Catch you on the live streams. And members, catch you tomorrow for that education session. I'd hold off on buying unless you see something very clear. Wow, that is pretty damn close. That alert just hit while we were on the stream. I didn't even have a chance to get off. Damn. Now, I told myself I was going to play it safe today. Not safe, but I was going to play it a bit more risk averse. And so I'll wait for the next push up above these zones, and then I'll look for that higher low retest. All right. So even though I didn't catch this wick down here, I can still get an entry right at that support if we have an engulfing, and this will allow me to wait for the market to show that bullish momentum shift by clearing this area, showing buyers back in control, and then looking for a higher low entry so I can get a discounted buying price. Okay. If you guys want to know how to trade, make sure to hit the link in the description and I'll catch you there. Can you ask for one free 100K challenge for me, please? I will. If you guys grab a ticket to if you guys grab a seat to the masterclass or a ticket to the FX Summit today using the promo code, we'll put you guys in a raffle to win a free 100K challenge. Done deal? You guys made it to the end. That's your congratulations.